like, wait, I keep seeing this thing blow up in the backtest if I try and go too fast. But if I go slow, if I trade with small size and conservatively, some of these systems are actually working. They're making more than they're losing, and they're generating capital over time.
So welcome everyone to what's going on with TraderNick. We spoke a long time ago, I think many years ago. Nick has evolved quite a bit in the past few years. Has a lot of things we can catch up on and kind of talk about his trading. So welcome to the podcast, Nick. Good to have you here today.
Hi, Etienne. It's good to be back with you, and it's always kind of like returning home when I get to talk to you again. So it's good to see you, and love what you're doing on your podcast.
I appreciate that. So I know we spoke a few years back, but tell me kind of what happened for you in the past few years. Of course, you evolved a lot in trading. You were funded. Give me a brief overview, like what things you've achieved in the past few years.
Yeah, sure. So the last few years have been really an interesting time for me. I feel like I've matured a lot as a trader. You know, there's this phase that everybody is sort of working on. Most listeners will probably be in like the early phases of their trading journey, like trying to figure out, how to find the right strategy for themselves and that point. And then you get to this point where once you get to the break-even stage, you're working through that. You're trying to like, okay, find profitability. Then you get profitable. And then there's like the following time, like the years after, where you are like slowly refining your process further. Like you're trying to figure out how to get better each day and learn something new. And for me, that has been really my goal in the last few years, slowly trying to incorporate new strategies or new ways to look at the market, or at least reduce risk and maximize returns. It's been the last few years has been a lot of growing as a trader, maturing as a trader. I feel like, I've been profitable for a number of years now, but it's just kind of a never-ending learning journey. And what I've learned at the end of the last few years is every time I think it's almost like the more you learn about the markets, the more you realize how much there is to learn about the markets. And it's almost like this weird curve where when you first get into trading, you think there's like, it's not that hard, or like it's kind of a simple process. And then the second you actually, the more you learn, the more you realize you don't know. Would you agree?
For sure, definitely. A lot of things you can definitely go into, and what's refining your process anyway. Did you change the way you're trading, or was it more like a matter of getting more capital, kind of working on other things around your trading edge you already had before?
Yeah, so in terms of the trading style and approach, it hasn't really changed. I'm predominantly a swing trader. I trade with a good bit of a fundamental analysis approach. So I typically do focus on what's happening in the macro, looking at the economic statistics, taking a look at what central banks are around the world doing. That's kind of my baseline. And the easiest way I like to explain kind of my trading approach is in terms of finding a direction in the market, trying to kind of be bullish or bearish on something. What I start with personally is the fundamental analysis side, which I know some people love fundamentals, some people don't use them. I've found a lot of clarity in the markets through them, and whatever leads you to finding that clarity and simplistic approach in your strategy or trading, I think is important. But for me, it really has been the fundamentals. Really, directional bias for me is easiest when I understand what is really driving prices in the markets. Is the Federal Reserve expected to cut interest rates? And how is the economy holding up according to some of the key metrics that people are looking at, like for example, like the labor market, or taking a look at GDP growth and, company earnings and things like that. So I really like finding direction through fundamentals. And then I use a really simple, like textbook technical analysis approach for my entries and exits, primarily on like the 4-hour or daily chart. And I'm trading, basically with trends. I'm looking for markets that are trending well one way or the other. And as long as the fundamentals kind of marry up with them, I'm looking for break and retest entry points, and I have a trailing stop method that allows me to try and let winners run, and I cut my losses pretty quick. So I'm a pretty standard trend follower, with the twist being I like to kind of put a filter of fundamental analysis over whatever I'm doing. And that's really been a successful approach for me. And again, with fundamentals, that is a very deep rabbit hole. So when I say I learn something about the economy, it only leads me to being like, oh, there's a lot of stuff I need to learn more about for me to really build out my knowledge base. But I think that that clarity from having that simplistic approach has been very key for me. And one thing I'll add to that, Etienne, I think that a lot of people, when they hear about fundamental analysis, they're like, that is just so much. There's so much theoretical there. There's so much like you're looking at like, oh, the jobs data, but how do you know if that's important? Or should I be paying attention to the CPI numbers, inflation statistics? And there's so many different things that it can almost be overwhelming. And I think as we jumped on the call here just before, I was mentioning that what my company kind of does is we build tools that try to bridge that overwhelming gap to a simplistic approach. So we build like software, like visualization tools for traders trying to better understand macroeconomics and how they impact the markets. So we build charts for like GDP statistics and things like that. But long story short, in my personal trading, how that's been helpful is that our system also will categorically assign bullish or bearish kind of signals to each metric, which helps to take something that is kind of theoretical, fundamentals, which is a lot of like spinning in your head different thoughts, and tries to place them into a rubric of sorts where we can kind of get like a scoring and systematic approach. So I'd actually say that my approach to fundamentals is my best approach to trying to make it into a systematic or mechanical system to a degree, from something that is very discretionary. That's the biggest kind of pushback on fundamentals that I often get, is like it's kind of discretionary. You know what I mean?
What happens if you have like different conditions that kind of give you different ideas of fundamentals? Maybe you have like one indicator that's more bullish, one that's more bearish. Would you look at something to be all green, or can it be like green and red and kind of mixed, or how do you look at it?
That's a really good question. So exactly what you said. When I'm looking for something to actually like trade, I'm looking for things to align very well. So I'll give you a quick example. In 2022, the US dollar was like going up and up and up for like the entire year. Some traders might remember. And it was because inflation was rising, and the Federal Reserve, to combat that rising inflation, was hiking their interest rates like every single meeting. And when we looked at the US economic statistics relative to many other developed countries and banks like the ECB, the UK, right? All these places, they were seeing inflation, but they were not seeing as nearly as strong economic data. So they're kind of bridged this or built this very clear FX trend. And it was basically, US dollar strength, because almost all of the signals that we look for, CPI, NFP, all of the job statistics that we were honed in on in our software, the PMI statistics and retail sales, they largely favored the US over other places. And so the dollar was strengthening off of the back of that and the Fed hiking rates. And so to your point about, everything green or everything red, we actually use everything blue or everything red. And in this case, it was like everything blue for the US dollar on our scanner, our visualization tool. And so that actually triggered a lot of like ideas, a lot of trade ideas for dollar bullishness that year. And it really was one of my better plays that year, was staying long, things like dollar yen, and short things like euro dollar, of course, still playing on that dollar strength. But I think that, to your point about, what if you get conflicting fundamental views, and that is really important, because I think that's where a lot of people go wrong with fundamentals, is in their head, they're trying to balance like, well, which one do I listen to? And then it just becomes like a self-fulfilling bias of like what you want to hear. And for our system, the systematic approach, which we call it the Edge Finder. I haven't mentioned the name. The Edge Finder is the software that we use. It's fun kind of name. The idea is like finding edge through economic data. And so the concept there is when they have mixed signals, when you get something where it's like, let's say CPI indicates high levels of inflation, and that could be strong for the currency because the central bank will hike rates. But at the same time, GDP numbers are very weak, which does the opposite effect. how that would actually come out, long story short, was the edge finder would basically assign like a neutral reading. So it would say we don't have a bullish view, we don't have a bearish view, because these two things kind of offset each other. So sometimes you get really strong jobs data and really weak GDP numbers, and in that case there's not really a bias there, there's not really a trade for me. So I hope that makes sense. But yeah, so we're looking for things where signals very greatly align and we get a pretty clear bullish or bearish signal, and then from there looking to apply simple textbook technical analysis and risk management, all that good stuff.
I'm curious how long your fundamental views last for. Is it like many weeks or multiple months, or like only a few days or something?
With the software, basically what we're trying to do is keep an eye on all the major releases. So the tool is constantly like importing the latest data. So like this Friday, at the time of us recording it, there's an NFP report. So on Friday, shortly after the NFP report, the Edge Finder will then import that data, pull it in, and factor it into the algorithm, which can change scores pretty quickly. So things can change week to week. It just kind of depends how data falls. If it falls, and gives us a new viewpoint, things can change drastically. But there are also times where, you can see a bullish reading for some time, and that's generally how my view of the market stays too. So, as a swing trader, there are times where I can stay into trades for weeks, or there are times where I can stay in trades for just hours, right? So if I'm sure that you've had many conversations with, I know you have because I've listened to them. You've had conversations with people who are more trend following in nature, where they're letting winners run, so their winners take time. And then there are more kind of mean reversion traders who are looking to counter trend or go against, find overbought and oversold value spots. And those trades can be pretty quick for winners, where they're just kind of cashing in profits and moving on to the next. So for me, I definitely fall in the former camp. I'm more of a trend follower. So my core main strategy involves, if I like the setup for something and I'm bullish on something, let's say, and I find an entry point and I'm long, I am looking to basically hold on to that until it hits my stop loss, or until I can trail a stop loss into profit and it hits my stop loss at that point. So I don't use take profit orders. I really simply just use trailing stops, which has its criticisms, because sometimes people will say, oh, the market will make a huge move one way and then it will come crashing all the way back down or all the way back up and take you out for a very small profit. And that's kind of the price to pay with trailing stops. Sometimes, as I mentioned, like in 2022 and this year, sometimes you get some really good trending moves, and they just allow you to really rack in very large profits on singular trades. I know that you've done interviews with Tom Basso before, who I've also interviewed, and I really like his commentary. And for a number of years ago, I was listening to him as well. And he was just kind of pointing out that a lot of his winners came from giant, couple small, like individual trades made up the large majority of a lot of his gains. And I really, I heard that and I resonated with that, and I tested it, and I, found that that's kind of a similar, approach or realization that I've had in the markets, is like the massive majority of the profits that I've made have come from singular trades that have just gone, very, very far in one direction.
Yeah, you mentioned a lot of people get frustrated with the trailing stop losses. They either get stopped out too early, or they miss out the whole move, or they do it too late. How do you trail your stop losses, and how often do you readjust your stop losses?
I like to, I mentioned earlier that I typically look at the 4-hour and the daily chart as the primary kind of price gauges for me. So if we think of just like really standard cookie cutter technical analysis, let's just say you have an uptrend with higher lows and higher highs. I'm looking to get in on that higher low. Let's say I do get in and it breaks through the highs, forms a new higher high. At that point, I just trail my stop loss behind the lower low, or the higher low, and then vice versa. So every time we break through new highs, if we're in an uptrend, or break through new lows, I'm looking to trail my stop loss behind the relative, low or high, depending if I'm long or short, and just try to, again, let it go as long as possible. The way I think about it, Etienne, is like, if I am in something and if I'm really right about something, like fundamentally, like let's say I think that I think gold is going to really make a move higher in 2025. Let's just say that as an idea. And if I'm right about that idea, I don't want to be right for, a couple percent move or whatever that would be in pips if you're trading the CFD version. I want to capture as much of that move as possible. If you had used a trailing stop, which this was for me this year, 2024, some of my biggest trades came from some gold longs that I took in February and March, where you had just a really, one directional up move on gold for a couple months there. That allowed me to really get some of those beautiful risk reward trades. That being said, though, the criticism of trailing stops is so real because there's also times where, the market's chopping around and nothing's following through. So I kind of have to, I think of it as like going fishing. Like if you're going to go fishing, I'm not a fisherman, but I know this analogy kind of worked. So the idea basically being if you go fishing, you know that most of the time you're not going to catch the big one. You might catch a little something here and there. You might catch nothing. And every once in a while you catch the really big one. And it's kind of like the whole point of going fishing. My trading system in terms of the mechanical aspects of price action, I would say is as simple as that, is really just looking for the big ones that come infrequently and being patient enough to survive drawdowns and slow periods in between.
Kind of going to get to capital. I know you've been able to grow your capital quite a lot over the past few years. Was it through your own gains? Was it through prop firms? Or how did you manage to grow your trading account to such a huge amount in the last few years?
The trading capital that I have has come from a number of different things. I've grown it over time. I've been trading since since like 2015, but I became profitable like somewhere around like 2017, 2018. And since then have just kind of consistently worked to grow the capital and compound it. And I've really grown a good bit of it from the trading itself. That being said, I wouldn't be fully honest if I didn't say a lot of it has come from, my career. I do podcast work for brokerages. I have a YouTube channel. I have a software business. So a lot of the capital that I do have transparently has come from the work that I have done in my kind of career in the trading space. I don't really sell a lot of education, but I do offer, my background is in software engineering. So before I ever really got into, all this stuff, I also was a software engineer by trade. So I had a software job before this. And then, before that, I had started some businesses when I was growing up. I had a landscaping business where I was cutting, a bunch of yards for all around my neighborhood. So I had some capital saved up before I ever got into trading. And I do think that is a unique story because not everybody does. A lot of people, when they get into trading, they don't have any capital. But by the time I got into trading, I had started a couple businesses that had done decently well, and I had some capital. But I was actually very afraid to lose it. When I first got into trading, I was really afraid to lose the money I'd worked so hard to get in other business ventures. I was big into cutting grass, as I mentioned. I also started a business where I was basically buying and selling, like tractors and four-wheelers off of like Craigslist and like Facebook Marketplace, which I've talked about this story on my channel a bunch, but it was a great way to build a lot of capital because there was a period of time before all the 2020 craziness where there was just a plethora, like in my local area in the South in the US, there was this interesting trade that my dad and I would make, and not like market trade, but we would go out to further out places, like more rural areas, and we would buy equipment from people who were just trying to get rid of it, who didn't have like a big local market. And then we'd bring it back to where I'm from, which is Atlanta, where there's a huge market for this stuff. So we could go buy, ATVs, Polarises, tractors in places where they didn't have an audience to buy it. And it was almost like a market inefficiency. It's kind of like you could go arbitrage it and sell it for fair value in the city. And that actually was a big component to how I had initial trading capital that was not small. But again, I worked so hard to get that when I approached trading, I was like, I'm not blowing this money. And so I have had accounts that have done really poorly, but I've never actually fully blown an account because I was always so careful, scared to lose that money I worked so hard to make. So if that makes sense.
Yeah, I mean, it's a very good point. What you mentioned is the fact that when you invest money you have from a job or business, something else into trading, that's when you can grow really much faster than by just trying to flip your account or like grow your account faster. You got to put in money to make more money eventually. That's kind of the point.
Yeah, and that's the thing, Etienne. I get a lot of slack for that on my channel, my content, and stuff like that. Is I'm a really big proponent of just going slow. Like I'm not interested in big gains, fancy gains. I'm all about like slow and steady, because I'm sure you know this too. It's like if you want to do this for the long term and you want to have like a sane existence, you've got to risk small, because if you're risking aggressively, if you're trading like a lunatic, it's only a matter of time before you're back to square one and you've blown accounts, and that's just not a sustainable approach. It's almost like I listened to you may remember, and you've probably interviewed him at some point or another, Rob Booker. Do you remember or know Rob Booker? Yeah, Rob Booker. So he had something that I listened to back in my college dorm that like completely changed my trading life, which was he was such a big proponent of small positions. And he's had this simple message for a long time. He's like, everybody is so, they complain so much when I say go slow and steady and make 1% to 2% per month or whatever. But he always asks the audience, but how much are you making right now? And if the answer is, for most people who are, inevitably, sadly, losing traders, the answer is they're losing, multiple percent per month, if not more. And so he was pointing out the idea as basically, instead of be angry that I'm mentioning 1% to 2%, is making 1% to 2% better than losing 5% to 10% every month? And the answer is obviously yes, but most people don't want to accept that. So I know it's not the popular answer. It doesn't sell courses. It's not exciting. It's not flashy, but going for slow and steady returns is the only way that I know I can do this long term. I can compound money over time. And taking the tortoise approach and the turtle and the hare story that we all grew up learning, is really ultimately the only way I know to win the race.
Good point. What did it take for you to become profitable in trading? Tell me about kind of how you started and then what happened for you to become profitable.
Yeah, so I mentioned that I had a background in software engineering. So when I got into trading, and I was also nervous to lose that money that I'd worked so hard to make from my other, ventures, I actually really embraced. I think I loaded up like a $500 account or something like that with a broker, and started trading like 0.01 lots, and had some wins, had some losses, and I realized very quickly, like, okay, this is way harder than I thought it was, and I don't want to like take another live trade until I do some testing. And that led me down just a campaign of back testing. And I think that the truth is, most traders approach the markets with an interest in making money, which is totally understandable. Everybody wants to make more money, and everybody hears about trading through somebody who's made a bunch of money trading. Like, that's an understandable, and it would be kind of gaslighting for me to say, like, that's a crazy thing to come to trading because you want to make money. But I also, kind of was just enamored by the markets. I was interested in them. Like, and I think that is very important for becoming profitable. So for me, once I realized like, oh, this is actually kind of hard, I just explored markets like without even trading, just like watching people's videos, listening to things, and I started back testing a lot. And I started very quickly finding I could program stuff in MetaTrader, which I know you're familiar with, like creating bots and creating systems. And I'm sure this will resonate with you too. Then what I found very quickly with that is I picked up how to program that, because again, that's what I went to school for. So I'm like, learning how to program in here, and I'm running through data, back testing stuff. And I realized really quickly, wait a second, this is really hard. Like, it's really hard to find an easy edge, and all these videos on how to, make all this money in the markets, they're not real. They're like, I'm testing these systems and they are far, harder than what meets the eye. So I think with my software approach, programming, trading robots and things like that, I realized very quickly that trading is difficult, that building or finding an edge in the market is difficult. And what I kept finding, and this was at the same time I was listening to Rob Booker every day. He was playing around with expert advisors as well and building stuff. And what I kept hearing him say was, just accept making $1 and keeping it and trying to make a small amount of money and just doing that consistently. I heard that over and over, and then I started seeing it in my back testing. I was like, wait, I keep seeing this thing blow up in the back test if I try and go too fast. But if I go slow, if I trade with small size and conservatively, some of these systems are actually working. They're making more than they're losing, and they're generating capital over time. But the variable there that's kind of frustrating is the time part, right? If you can manage risk and go slow, you can make good money over the longer term. And so that was where it kind of clicked for me. I realized through backtesting and through listening to, Rob's like monologues that small risk is kind of the secret to surviving the drawdown, right? That was the big secret, if you will, is like you have to be able to survive drawdown. That's the only way to trading profitability. So that was my big breakthrough, was stop focusing on, reward and start just focusing on risk, and the rest takes care of itself.
Was your mindset something you had to change, or was your mindset pretty good to be able to get profitable in trading?
Kind of, I didn't want to believe it, if that makes sense, with the whole, I've got to risk small, because it's so not fun. I remember being so bummed out because I was like, even with the capital that I had built up, I was like, I'm still not going to be able to do this for a living. Like, if I'm going for 1% to 2%, I think at the time I may have had like, I don't know, maybe $40,000 or $50,000 saved up from all my stuff that I had done. I was like, this is still not going to, in Atlanta, Georgia, rent is expensive, right? So I'm sitting there, I'm like, this is not going to really pay the bills handsomely. I'm not gonna look like those super wealthy influencers I'm seeing in the trading space anytime soon with this kind of return. So I think at first, in terms of a mindset shift, it was gradual. I actually remember when I sort of came to the realization that, okay, the only way to do this is go slow and make slow and steady money. I remember stepping away from trading for a few weeks and just being like, okay, I've uncovered the truth about this stuff and it's not very exciting. So I don't know if this is right for me. But then I continued to find myself like watching videos and learning about the markets and like exploring things. So I realized maybe this doesn't need to be my primary immediate like savior income source, but I do really like the markets. And so I realized like the only way forward was to accept that this is a long-term game and only push forward if you actually genuinely love learning about the markets. If you don't, I say it all the time, I don't think you can become a profitable trader and stay consistent if you don't actually have a love for learning about markets. I really think that is a need, not a, this is not a side hustle. This is your primary focus if you want to get good at it.
Tell me about that time when you decided to go full time with trading.
Yeah. So when I was working at a contractor job for an airline at the time, and this was 2019. And 2019, I'm working full time job, and at night I'm making a video for YouTube, and I'm doing my trading. And I was just working around the clock. I was working a lot of time. I also had a small Discord, room at the time with a couple members that I had traded alongside and worked with for some time. And trading had been going well. Again, not life-changing money or anything like that, but I was making pretty good money. I could pay for a good chunk of my rent just from my trading at that time. And then I also had the job coming in, so that was doing well. And then I had the YouTube channel. So between all of those things, there came a point where the job was just getting very demanding, like very like time consuming. And it was like something had to give. And I realized, between my YouTube videos and my trading in my Discord room, I think I can do this. So I went for that at that time. What also helped me is at the time I was doing content for a brokerage within their portal. So there, I would never really say that like my sole income has been trading and trading alone. It's always been, I think I really like being on camera. I like creating content. I've represented, brokerages and all sorts of different groups and stuff like that. And I enjoy being a spokesman in the industry. I love, the concept of trading and doing that. So at all given points, I've had some role of, the income that I have coming from, being some sort of figure in the industry, which I'm very thankful for, and I love doing that. But I think that trading over time Here's the other way I would answer your question at the end is actually there came a time where I totally could drop everything else and just trade. And that came a couple years later. I would say maybe 2022, 2021, I could drop everything else if I wanted to and just trade for a living and go, island hop and do all that stuff if I wanted to. But I'll tell you one last component of that is there was a time after I quit the job and left the job and went full time just doing, my YouTube videos and my trading and working as a content creator for the broker. When I was in that phase of my life, I was working from home and I would be like done with everything that I needed to do for the day by like 11 or 12, midday. And I really didn't like that. So I actually didn't really love working from home by myself. I didn't like not having coworkers and people to work with. And so I actually, at some point, decided that I wanted to do more. And that's where I really kind of kicked off the software business that I run, A1 Trading. So I actually I'm in an office right now. I'm back into a studio office. And I enjoy working with my team and people to build stuff and just do more stuff. Maybe at some point, maybe when I'm more of a family man, I'll go, back to more of a different situation. But I do enjoy being productive and working many hours a day. It's almost weird because I like reached the pinnacle, the holy grail of what everybody wants to do, it seems, in trading. And I realized like this is not really what I want to do at this time, which sounds so, privileged. I understand, but it's what it is. I like to create stuff, and clearly you do too, as I can see from us doing this podcast.
No, yeah, it's definitely a good point. And a lot of people say, oh, like if you can make money trading, you should just be doing that and that's it. And I have to disagree with that too, because like, what else are you gonna do with your time? And if you have like 6 hours a day to like do whatever you want, you're gonna just lay down or like read a book all day or something.
Yeah, because trading for me is like 1 hour a day. I don't know how much time you spend on it, but now getting profitable is a full-time job. Like that takes so much time to back test and do all the work. But as you're pointing out, like you have a lot of time after that. I'm a huge proponent of doing other things. But I will say, Etienne, like sometimes people will say that, and what they're trying to get at is like, oh, you don't actually trade at all, which is where I definitely push back. I live stream my live positions. I pull up my brokerage statements all the time. Like I really do this. And I think that that's another important distinction is that, to your point about having multiple sources of income, sometimes people use that as a scapegoat. They say, well, like, oh, I have multiple sources of income. And what they really mean is they don't trade at all. They just make money from everything else. I'm definitely not in that camp. And I believe that that's kind of wrong. So I actually think that, if somebody is someone that you're going to invest your time and energy and money into, they should be able to show you track records or broker statements. And I stand pretty strongly on that point because, that's a point that I always sort of have an aggressive take on simply because, Etienne, I know you've probably been in this situation and many of our listeners right now have. Many people are very busy. They have full-time jobs, they have kids, they have school, they have, debt to pay down, whatever. They could be doing a lot of things. If they're going to spend their time listening, learning, or even perhaps spending money on something that, a trading creator offers, that's where I think it's really important that they follow somebody who leads by example and actually shows, long-term profitability, because again, that's the only thing that you should do. That's what I believe is like, if you really respect your audience, you've got to show them that you're doing what they are following you and think that you do.
Totally, for sure. I'm sure you've seen over the past few years, there's been a lot more, since COVID, a lot more influencers about trading that are out there now. How do you find someone who's good at teaching trading? I mean, they could, of course, look at you. They could look at like the podcast that we have and stuff. But how do they find someone that can actually teach them something useful and that will work for them?
Well, the first thing I would say is follow people that you listen to. And so here's what I would actually say. I've had some people who said they watched me initially in their trading. They didn't like what I had to say. They went and watched a bunch of other people, and then they inevitably got crawled back into watching my stuff again. What I mean by that is, if you first listen to me when you first get starting trading, I am not the most fun person. Like, because you're like, oh, this guy says, make 2 to 3% per month. Like, that is such a waste of time. Like, this other person's saying I can make, 10%, 15% a month. And then so I've had people who have come back later and been like, I actually gave your content a second look and I really appreciate it. So I'd actually say, first thing is when you watch somebody, if you feel like a little bit like, oh, they're a bit of a naysayer, give them a second chance, because a lot of us, including I know yourself, Etienne, and myself, like we've watched a lot of people come and go in the trading industry, a lot of people who have lost a lot of money. And sometimes speaking the truth doesn't get you the biggest audience, or it doesn't get you the most clicks and views, but oftentimes it is the true value that's out there. The other thing is obviously finding people who, you know, maybe show their real accounts, show real positions, show my FX book. I know Darwin X is a new big thing. And then, you know, my favorite, which is just live broker logins. I think that's like a huge thing, because again, it's a great way to know that they actually trade, that they actually have skin in the game. And then there's like the third wave, which is just, do they feel like a genuine human being? Like if they're showing you a bunch of, you know, fancy cars and all that, that's a pretty quick red flag that they are not probably somebody who is doing that for your best interest. You know, sometimes people say, oh, it motivates me, and I get it, but you don't need motivation. You need discipline.
I would agree with that for sure. So you told me you trade now an hour a day mostly. How does that look like on in terms of like your routine? It's like 1 hour as a box trade, and then you go throughout the day, look at the chart, or how does that look like?
Yeah, so most of my trading actually happens right around my live stream that I do, which is most mornings, just around 9 a.m. Eastern time. And so most of the time I'm doing my analysis on stream. I'm managing any positions I have, and then that's pretty much it, because I trade during the New York session, but I very oftentimes hold positions, for, again, as I mentioned, days and weeks. So I'm not like in and out by the end of the session. But so when it comes to my trading day, what that looks like, it typically involves, I look at the markets in the morning, place any positions that set up for me according to my rules. And then I may look at it in the afternoon to maybe trail a stop if something has moved a lot. There's like the standard 9 to 11 a.m. Eastern time where the markets move a lot. And then there's like the 3 to 4 in the stock market world, like 3 to 4 p.m. where right before the closing bell, you get another big push. And so during those two times, that's usually where I'm making adjustments or entering new trades.
So where can people connect with you or find out more about your work if they want to see what you do and kind of learn more from you after this podcast?
Yeah, absolutely. The easiest way is to just look up my YouTube channel. You can just search up TraderNick, or you can find me on Twitter or X. I've gotten a lot more active on there, and I think the trading space is really booming on X. I didn't really know that, but I'm kind of late to the scene. I've only been on Twitter for the last like year and a half, 2 years, but I've really embraced that in the last 6 to 12 months. You can find me there at TraderNick FX.
Awesome. We'll put a link below for that. People can check it out in the podcast notes as well, so people can connect with you there directly. You've gone a lot over the past year also, which is kind of amazing to see. And I look forward to see how, you can help people definitely. So people can check it out and reach out to you that way. Nick, I appreciate your time here and the advice you gave to my listeners. And hopefully you can catch up soon and discuss more about trading in the future.
Absolutely. Thank you, Etienne, and have a great day.